Good afternoon, traders. This is Tony D from easyMarkets in the Sydney Dealing Room. A little update for you since some big moves happened on Friday, specifically in the pound. Now, the pound was already under pressure for most of the week, and then we saw some heavy selling to finish the week to fresh multi-week lows, almost multi-month lows and year lows here. Now, this is on the back of the GDP numbers missing quite sharply. Forecast at 0.3, 0.4, came at 0.1 quarter on quarter GDP numbers, and that's sort of sealed the nail in the coffin here on the chances of a rate hike this month, in May, from the Bank of England, and very likely that with the troubling slowdown in both CPI and GDP, they'll wait for Q2 data, and that pushes out the first rate hike this year to July or August rather than in May. And it really came at an opportune, worst time for the pound, because it was already on the ropes from the US dollar strength, and this just helped it push back even lower, and is threatening now to the whole uptrend is under threat, and could completely break down if this 137 level, which was the previous low from the beginning of March, breaks down. And this was pre-Brexit deal levels, so with the Brexit deal and still breaking below 137 would definitely cast a really negative shadow here on the pound, and you'll see it across all the pairs where the pound has been doing so well for most of the year. A lot of those gains are just unraveling quite quickly. So if you're looking at some of the more popular ways of playing the pound, the euro pound shorts have broken through some key level there on 88, and the pound yen has also reversed through to back to testing 150. Below 150 would accelerate the losses, and the euro pound has room here to move towards 90, which is the big level that held in previous times of pound weakness. So there's still a good 2%, 3% ability for the pound to reverse here, especially with positioning so long in many of the pairs. A reversal based upon sentiment and data is really negative. So we have to really keep an eye on it. If it can settle down and stabilize, then perhaps we can look to medium-term rebounds, and longer term the outlook is still pretty solid, but from these levels anyway. But it's just a timing thing, as always in the markets, and a lot of negative news come out in the last 2 weeks that have really changed this tune here of the pound. In terms of what we were watching this week and the US dollar strength, the US dollar is still quite strong. Did have a general day of weakness on Friday. A bit of profit taking came across the board. So if you're looking at the dollar index, we did see a pullback from 91.80, and a little bit subdued today in Asia. No real effect from the announcement that North Korea is going to denuclearize over the weekend. That was taken in its stride. A lot of that has already been talked about a lot though in the past 2 weeks, so that news is sort of out. And the market was due a little bit of a pause, a little pullback here in the US dollar rally, because it was quite sharp. And so looking forward today, we have to see if the US dollar strength was to come back this week. And then if it does, and generally the trend continues, then you're looking at key levels on some of these major pairs. So the euro 120 is key on the downside, and the dollar yen 110 is key on the top side. Given where the pairs are, they'll probably be tested at about the same time. And if they break those key levels, then that can lead to exaggeration of more US dollar strength against everything. And perhaps we'll see the Aussie dollar, which is now sitting at multi-month lows since December, test that key 75 level. Now 75 held sharply back in December, and we got a rally all the way up to 81.30, pretty much non-stop. So sentiment can change pretty drastically on this pair, but if the US dollar was to remain strong and the RBA remains as neutral as it has been, then in the short term anyway, it is possible for the Aussie dollar weakness to continue, and below 75 does open up a fair bit more room, and does threaten the general uptrend that multi-year uptrend that the Aussie dollar's been up on, where every dip has been higher than the previous low. So we've been from 60, 67.5 up to 68, up to 69, up to 68, 68 and a half up to 69, up to 70, up to 72, up to 75 last December. So this would be a change in that pattern if we were to break down here, and be very damaging to the overall picture that the Aussie had put a bottom in a couple of years ago with the US dollar strength. And now remember, this was back when the euro was closer to 105. So the Aussie dollar is doing quite well in doing quite poorly at the moment. And this is seen across all the risk sensitive currencies. So Canadian dollar and New Zealand dollar are all on the back foot. Canadian dollar is probably the most interesting of the pairs in terms of weakness. Fundamentally, they're still connected to oil, and oil is quite high relative to where the Canadian dollar was last back towards 130. Oil was a good $5–10 lower than it is currently. So the US dollar strength might be pushing it up at the moment, but the general tide of the Canadian dollar CAD trade is lower. And it would be almost defying gravity if oil was to continue higher and dollar CAD was not to have some outperformance, especially against the other commodity currencies. And so if you're looking for strategically ways to get involved against selling the US dollar, if you feel like that is overdone, then selling dollar CAD makes a lot of sense. The Bank of Canada is paused a little in its rate hiking cycle, wanting a little bit more data, but it's still in the middle of a rate hiking cycle, whereas the other currencies, RBA and RBNZ, are still not. So there's still priced in chances, strong chances of a rate hike this year from the Bank of Canada, whereas those other currencies are not, and that's where we can see that outperformance in the medium term as well. And also, if you're looking at the big story that's can break at any point this month, or in the next couple of weeks, is the negotiations between US, Mexico and Canada are nearly done, and a deal is supposed to be almost at the point of being announced, and that would lead most likely to strong Canadian dollar gains and strong Mexican peso gains. So you can probably play this pair in anticipation of that, but you have to also be right with the timing and just be aware of how much US dollar strength there is before trying to sell it. Alright guys, well that's enough for today. We do have a big week ahead. Tomorrow we'll be looking at the RBA, and on Friday is the NFP. We'll go more in depth in some of the crosses. If the US dollar continues to be very strong, then we might have to go looking to buy the US dollar, or to look at some of the crosses if you want to get away from the US dollar.